Bob Smith, U.S. stocks performed fairly well in 2012, outperforming most of the other emerging and developed markets in the world. Do you expect a repeat in 2013?
Well, I think it's, when you said relative to other markets, I think that's sort of the key, is that other markets had bigger issues than the U.S. So I think one of the reasons the U.S. did well is that growth was somewhat accelerating in the U.S. Europe had its issues, and in emerging markets, most of the emerging markets had decelerating growth. And I think when you look at 13, I don't think all that will continue. So I think, for one, I think emerging markets, particularly the bigger ones, will have accelerating growth. I think that should help those markets. And I think Europe has dealt with most of its pain. I think Europe will kind of be steady state, kind of back and forth. So I don't expect Europe to do a lot better than the U.S., but I think the emerging markets will be the driver.
Well, let's speak about the biggest of those emerging markets, and that clearly is China. China hinted at a slowdown, but we never really got a big bubble popping as a lot of people predicted in 2012. Is the best or worst yet to come for China?
Well, I think China's gone through a difficult time. So I think China has been a difficult market. Even the non-Chinese shares, so the ones that trade in Hong Kong and the one in the U.S. And I think part of it is growth has decelerated, yet at the same time they've had expenses being relatively, I guess, still relatively strong. And so companies have had margin compression. There's been great fear about what the new administration might do. I think as we go into 13, with growth getting better, so I think that should be better for margins, and two, policy being more clear, I think both of those will be good for Chinese companies, but they're also going to be good for companies like a Richemont that's exposed to China, because I think business will begin to get better and people will have less fear over the near-term fundamentals of their business.
As China has prospered, wages have increased, and a lot of manufacturers have actually moved from China to emerging Asia, places like Thailand and Indonesia. You're overweight some of emerging Asia in your fund. Do you expect this to continue? Is emerging Asia really the best play now in the emerging markets?
Well, I think emerging Asia is a good longer-term story. I mean, we do own a few companies in Indonesia in particular. But I think near-term, and this is just more of a next 12 to 18 months, I do think we will see some money go back into the China or Brazil's, two markets that we think over time should be reasonable markets, but have been very difficult. But over the longer term, we think that Asia as a whole is going to be a very good place to invest, and that would include China and non-China.
You mentioned Brazil. A lot of people say as China goes, so goes Brazil, because Brazil is such a big supplier of raw materials to China. Is that link still tight, or will Brazil come into its own spotlight with the Olympics and the World Cup coming to it?
Well, I think it'll be a little bit of both, if you want to think of it that way. So I think when China stabilizes, I think while they're not, we don't expect commodities to be extremely strong, but I think when China stabilizes, people will fear less about the commodity negativity to Brazil. And I think that people will start to focus more on the internal growth in Brazil. I think with the World Cup and with the Olympics coming up, I think that infrastructure spending should get better. I think policy, which has been somewhat of a negative, I think, for the Brazilian market, as the new government has been a little bit more involved than the market would like. I think that will stabilize somewhat as the economy gets better, and people will feel better about Brazil, going out 12 to 24 months.
And finally, Europe's problems hurt a lot of U.S. companies, and they scared a lot of European investors into the U.S. market. Does that continue in 2013, or does Europe get itself sorted out and people will return and start buying European stocks?
Well, it's interesting because Europe as a market has actually been okay. It's just that there have been some really bad stocks and some really good stocks, and the two things that have netted out to be, a reasonable market. I think people will feel better that Europe is going to hold together modestly. I think it will be ups and downs. But I think the growth is still going to be relatively negligible, probably over the next 2 to 3 years. So I think companies will continue to focus on other markets for growth and focus on other markets for employment. And I think that's going to make Europe just difficult. Europe will stay difficult, but I think it will stabilize.